Valora is the easiest way to send, swap, collect, and purchase digital goods on the Celo blockchain. Download the app and start exploring dApps like RE Gallery today at valoraapp.com/empire. What is this banter that you speak of?
What is banter? No fluff and empire.
No.
We don't like to talk about fluff. There's a lot going on.
How you doing, man?
You know,
how's the week treating you?
Feeling great. You know, I'm on a runner's high. I told you I was going to run last Roundup, so I went to London, ran that marathon, and yeah, I had a good time. London's a great marathon, so yeah.
I heard you. You broke 3
hours.
Other
than, of course, all the stuff that's going on. 2 hours 47 minutes and 18 seconds.
Sub 7, huh? Sub 7 minute average. Nicely done, sir.
620 per mile, or 357 per kilometer. So it's good. Not that we're tracking this.
Yeah, but who's counting?
Right? I'd rather track my running stats more so than look at TA on a crypto chart, or like all these, because that's not reliable, or alerts in crypto as we've seen this week. So, anyways, I'd rather just stick to, looking at charts of my running performance, which also sucks really.
Nice. Preach. So do you have a trainer? What goes on with these marathons? Is this an annual, every year thing? Multiple marathons a year?
I try to do at least one a year. Yeah.
Nice. Well, we're back into the markets. It's kind of a weird week for the markets, huh? You basically had yesterday you had, what's their name? I think it's Arkham or something, like tagged a wallet, and then it was DB News tweeted something out. And like it was kind of just a bit of chaos in the markets with this like flash crash. You had this like open interest got wiped. I think it was that Mt. Gox wallets were selling. And so if you look at the charts from yesterday, Bitcoin started the day around 27K, pumped to 30, fell back to the low, and then the daily candle finished right in the middle at like 28.5. So you had like a 10% Bitcoin price swing. Pretty crazy price action. Can't remember a day like that in a while. What do you make of the markets this week?
It's probably one of the strangest trading days, like referencing specifically yesterday, where you woke up during the day and the market was rallying, Bitcoin was up a ton, and everything else kind of followed. People, of course, were like, hey, there's, every time there's a bank run, specifically First Republic was down like 22% pre-market. And then people are correlating that to like the rise of Bitcoin. And it's like, this is the case of, why Bitcoin, why crypto, ensued narrative. You close your laptop, you came back 6 hours later and you're like totally reversed that rally. Of course, then turns out that, as you referenced, there was like this sort of fake alert. I think the biggest takeaway is it feels like crypto, like in 2016. I think this is more of a side effect of the low liquidity in the market. Just these dramatic price movements, I think, my estimation and all the accounts that I follow that are way more sophisticated, that are looking at like liquidity across kind of exchanges and on chain, is that it takes far less liquidity to move prices, including Bitcoin, right? And I think that's just a testament of liquidity has really dried up over the last 6 months. And so you do see greater volatility. Like, of course, people would say there is volatility in the traditional markets, increasingly so. And I think that's more of a testament of, this sort of Wall Street bets movement. And, people are really, click of a button can trade. And a lot of it is just retail. I also saw a chart that says, look, the average holding for stocks has gone down from like 7 years in the 60s to like basically a couple of months or weeks. And so I think it's just kind of our generation is just more trigger happy to trade a lot. And crypto, obviously, it's just on steroids, right? But specifically on this day, I think it's just highlighting the lack of relatively low liquidity in the market.
Yeah. So what happened is that Arkham is this like new data platform in crypto. They alerted users that Mt. Gox and these government controlled crypto funds were both on the move. They later said this was a bug fix deployed that previously was causing alerts to be sent by accident to like the small subset of users. What was also interesting was the the amount of open interest that was just wiped off the table. So within crypto, the global cryptos future market wiped off 3.5 billion in open interest. And then actually, I was looking at the global metrics for this outside of just crypto, it was the global open interest dumped from 22 billion to almost 18 billion. That seems low though. Excuse me, global crypto open interest. Yeah. So a bunch of futures traders took off their interest.
Yeah, it's sort of
closed out their contracts.
Yeah, it's a crab market. I feel like anything between 20 and 30K range is just going to be these weird days. So like if, again, none of this is a recommendation of any sorts, but I would cautiously advise against using leverage given market conditions. It's just, you see days like today and or yesterday, and it's not I mean, look, using leverage in crypto has always been a recipe for blowing up at some point, but particularly in these conditions is just it's tricky. But anyways, talking about today, I think you also saw a pretty sharp rally on the low. Obviously you could talk about a lot of folks are still sitting on stable coins, right? Haven't really fully deployed. They went to, and so I think they're using these dips as opportunities to cost average their way in. So, maybe that's a good segue into kind of positive news or something else. But I mean, that's really kind of everything that I take from it. I don't know if there's anything else that you have.
No, I mean, before getting into the positive news, let's talk about one more thing, which is First Republic. You mentioned it briefly, but First Republic reported on Monday that its total deposits had fallen by 41% in the first quarter. Stock fell to record lows. Shares plunged, I think, by around 50% on Tuesday, fell as much as 35% on Wednesday. New low of, let's see what it's trading at today. Last time I looked, it was like 480. Now it's back up to 650. Market cap of a little over $1 billion. Stock was halted a couple of different times. They had tried to find a kind of a savior. I think we're talking to the government about bailing them out. They're talking to a couple other big banks about bailing them out. And what some folks reported last night was that the government is not going to bail them out. The Fed will not be stepping in, it seems like. So now it's kind of over to the banks.
Not there's a very interesting piece of language there that said not currently, which was a lot of people reading into that saying, well, maybe they just will wait for the situation to really, really deteriorate. Although arguably, as you said, how much more can it deteriorate, right? That's sort of the question.
Yeah, I mean, and they also already had 2 multi-billion-dollar bailouts, right, a couple of weeks ago. So I think option one is basically you stay the course. If you're First Republic, you stay the course. You maybe wait for the securities and the loans to mature. That's a long road. They do have a little bit of liquidity that could help them survive, and that's kind of a dangerous game. Option two is you try to appeal to either the big banks or to private equity. So you could try to sell some of the loans and securities at the same cost they bought them for. In exchange, the buyer comes in, they probably get some sort of preferred equity interest in First Republic. Probably a pretty tough sell because those assets are selling for well above the market rate. I think First Republic's bonds mature in like 2045 or 2046, and they're trading at 43 cents on the dollar right now. So I think if you're a bank, if you're like JP Morgan looking at this deal, you're kind of between a rock and a hard place, right? If First Republic fails, the FDIC is likely going to want to avoid systematic risk, offers insurance to all depositors. You probably even those without insurance, right? And then that costs a pretty penny to like the banking system, probably has to get funded by large banks, and that ends up costing them tens of billions of dollars. So even if they don't go forward with an acquisition, if First Republic ends up failing, FDIC system is probably going to, in one way or another, end up costing those banks a lot of money. So that's, Yeah,
we'll see. I mean, is this a systemically important bank? Unclear. Certainly, it's my estimation. What is it? The 14th largest bank. You're right. I mean, in March, roughly a little over a month ago, March 16th, a consortium of banks, including JP Morgan, Bank of America, stepped in and infused like $30 billion. naturally, those probably are the folks that are now looking at, as you say, kind of picking up the depositor base. The question, of course, then is like, how bad will it get? Will, like, if the Fed really will, like, if they let it die, quote unquote, and don't step in, like they did with Lehman and others in the global financial crisis, then what happens? Like, they get bailed out by a bank. They basically buy it for pennies in the dollar, as you say, and like pick up all those depositors, and like and are willing to absorb any withdrawals, and like they take all the kind of the
Yeah.
assets and liabilities, and then they hold to maturity because they have a much stronger balance sheet, if you will, most likely. But the thing that I am thinking about is like the game theory of like, how long do you wait? Obviously there's a bit of a, you wait as long as possible to get a
If you're
better.
a bank, you wait as long as possible, but right before it goes into receivership. Because I said there's two options. There's really three options. The third option is what happened to Silicon Valley Bank on March 10th, when the California Department of Financial Protection took possession of and closed down SVB. And then March 12th, when Signature Bank was closed by the New York State Department of Financial Services, the NYSDF. Right. That's like, I think the worst case here is if it goes into receivership, which just means that like a regulatory authority or government agency takes control of the bank, takes control of the assets. Usually the goal there is liquidate the bank's assets to repay the creditors. So I think if you're a bank or a private equity firm, you essentially, and you're trying to optimize for the deal, you're basically trying to take First Republic to the brink of receivership, but not let it go into receivership. That's my understanding of this.
Yeah, I think you're right. The only question is like, well, what about other banks? And the potential cascading effects of people like, there is a lot of jitterness, fear in the market. If this really goes to that level, I wonder if it's going to trigger a whole cascading effect of bank runs on other banks. And then, of course, the thing that most people are now looking at is commercial real estate and banks that have a big exposure to commercial real estate. And so, yeah, if you're the Fed, if you're Jamie Dimon, I understand, like, look, not every bank is Silicon Valley Bank, right? There's some great charts going around in terms of the exposure they have to commercial real estate, to some concentration in terms of industry, region, right? A lot of the bigger banks, Bank of America, JP Morgan, I mean, they have a very diversified portfolio. Their exposure to commercial real estate is fairly lower relative to other banks, or there's no particular exposure to any given industry, right? So, look, all those things matter, but I do think that by and large, like, I think I do worry about the second order effects of really letting it, pushing it farther and farther to that point of being very close to being taken into receivership and someone swooping in and buying it like a JP Morgan, in terms of just general confidence in the market and depositors.
So Bitcoin, I'm looking at the chart right now. Bitcoin pumped 10%, basically on news that First Republic was struggling, and it started the week around 27, pumped all the way up to 29. What is this number? 29.9. We almost touched 30. So I thought Nick Carter had the best take on this, which is he tweeted out, he said, the fact that Bitcoin almost mechanically rallies on news of bank failures is one of the most validating phenomena I've experienced in a decade of doing this. He said, to be clear, I don't want banks to fail, and I'm dismayed at how Fed policy has zombified the sector, which will surely slow growth. But having Bitcoin act in this manner is remarkable nonetheless. And then he said, which I think is a good take, also, I suspect the reason Bitcoin behaves this way is not because of some long Bitcoin short the banker narrative, but because each bank failure drives the Fed closer and closer to the liquidity bazooka, driving down the denominator in BTC USD. I think that's a good take.
Yeah, I think that's right. It all really comes down to liquidity, and
Right.
as soon as the Fed really dried up liquidity, then you saw a huge correction in markets, including crypto. And so, yeah, I mean, I think a lot of folks are just, it's tricky, right? Because before that, there was a really two headline inflation numbers, one in the UK, one in Japan, that was really sticky, fairly high in the UK. I think it was 10. Japan also recorded like record inflation. And so those two things, I think the market really kind of responded to that. And I think it was like last Friday and Thursday. And so this sort of sticky inflation narrative is something that I think folks will continue to hear. But but of course, specific to the U.S. is sort of bank failure situation. Really, you know, and the short of it is, if you keep raising rates, then that poses a huge problem to folks like Silicon Valley Bank that had a huge portfolio of bonds that just for every rate increase, you know, you basically like, if you need to mark them down, if you have a liquidity crunch, then it becomes very problematic where it creates a shortfall and a mismatch between assets and liabilities. So yeah, if they raise to 4.5, 5, then yeah, there will be more pain in the banks and more bank runs. And so I think they're probably not going to let that happen. Right.
Agreed. One of the most interesting things to look for in the next market, I think, is going to be the correlation between the SPY and BTC. Because I think remember when Paul Tudor Jones was like, Bitcoin's the fastest horse in the race? I think that basically unlocked a lot of hedge funds to start maybe not allocating to Bitcoin, but at least looking at Bitcoin. And so before that, they probably didn't have these complex correlation models. And after that, I think a lot of them basically set up their correlation models from the 2020 to 2022 era, when Bitcoin and the S&P were actually highly correlated. And I think one of the interesting things that we should all look for is like, if there's decorrelation between Bitcoin and the S&P, decorrelation ends up creating long-term flows. So that's probably something to look for here.
Yeah. Although, well, is it? I mean, correlation is always a funny thing, right? Because people it's very sensitive to the particular date that you're using and the time period.
Well, that's what I'm saying. I think a lot of asset allocators use that 2020 to 2022 frame.
You go even further. I think people were just using the correlation since like inception. And the problem was you never really had a global financial crisis. You never had a liquidity crunch. You were at record low interest rates. Like everything was pumping. Guys, it's not an uncorrelated asset class. Like I never bought that argument. I still don't buy it going forward. I think simplistically, and I don't want to over intellectualize things, is I think if crypto rallies initially, it'll be just purely because there's way more liquidity in the market.
You think everything pumps and Bitcoin's further out on the risk spectrum, so Bitcoin pumps more?
Absolutely. Yeah. That like I don't want to.
It's a good left bell curve.
As much as I'm a believer, we talk about like we bring in great founders, we talk about the promise of the technology, but another part of me just is acutely aware that it's really high on the risk spectrum and naturally has a way higher beta. So yeah, you get more liquidity in the market, it's going to flow into this higher risk asset, and it's going to exhibit a higher beta than the SPY. That's it.
Yeah, agreed. All right, next topic. I have a quick interlude though. One is 1000X podcast is back. You're probably listening to this on a Friday or Saturday.
Yes.
Avi and Jonah brought back 1000X podcast after a couple month delay because of some compliance issues. So that was episode 2 of 1000X. It goes live on the Empire feed. So if you're listening to this, you hopefully saw it yesterday. But if you didn't listen, you can listen. 1000X is just a show by traders for traders. Really good show. So go listen to that. The second is Blockworks is hiring. We have a bunch of open roles, but one role that might be interesting to listeners of this is a director of podcast role. So we have 7 shows at podcasts at Blockworks, I want to say now. We'll probably end the year around 10 shows in the network. We're launching a couple more in Q2 and Q3. We are hiring someone to oversee the entire network. So if you are really deep in the weeds with crypto, you like macro a little bit, you have ideas on like how to grow content and like ideas on how to make content like Empire even better, how to grow shows, you're comfortable working with talent like Santi, real pain in the ass, tough job. So yeah, we're hiring this role. It's a director of podcast. So if you have experience with podcasts or content and that sounds interesting to you, just DM me on Twitter.
Yeah, I think it's one of the greatest roles because I think the challenge for crypto has always been, how do we keep people engaged? I think what we're trying to do here is just create pure as much as unbiased educational content for people to really learn about this space. But growing that audience and acquiring that and keeping engagement high is a challenge, a good one, I think. How we present crypto to mass audience and really keep them engaged. And it's been really rewarding. Like you and I have been both in situations where we're in a random place and it's not your crypto native. It's like a pilot in an airplane and it's sort of like some random other person in the people listening. So they're interested. So all we got to do is I think that's really the challenge and the opportunity for someone to come into this role and really help us with that.
Yep. Agreed. Valora is the ultimate wallet for exploring the Celo ecosystem. Easily access over 50 crypto assets and 30 different dApps for swapping, sending, and growing your crypto, all from your mobile phone. If you want to see real-world use cases for crypto, Valora's dApps page is the easiest way to access a growing list of the latest refi and DeFi applications, including NFT marketplaces like the RE Gallery. dApps like RE Gallery, which is available for Android users and through Valora's web browser, are merging Web3 with traditional commerce to give local artists around the world the power to transform their art into NFTs and digital collectibles. Discover artists, browse collections, and use your Valora wallet to mint or purchase NFTs for real physical products. Download the app and start exploring today. It's valoraapp.com/empire, VALORA app.com/empire. What do you want to talk about next? You want to talk about MadLads, the MadLads Mint?
We can talk about that. We can also talk about the episode we just recorded yesterday.
Oh yeah, let's do that. Let's do that.
We had a great episode on this question of, can we decentralize sequencers? Because it keeps coming up, right? Like scalability as an overarching topic is something that we're going to continue to cover here because it's important, right? It's one of those things that you have Optimism and Arbitrum and Coinbase Base and ZK, some ZK implementations. Like it's going to be it's probably one of the most important phenomenon happening in crypto right now. But the question, and a number of people have raised this question, is the problem with a lot of L2s and the architecture between Ethereum L1 and L2 is that you have the sequencer and it's centralized at the moment, and so that has the question is, can you actually get to a point where it's decentralized without compromising performance? And we all kind of want to progressively decentralize these systems. So we brought on, maybe you can kind of talk about who we brought on and how the episode went.
Yeah, we brought on Ben, who's the CEO of. So there are three companies that are building out decentralized sequencer layers. There's Espresso, Astria, and Radius. And we brought on the CEOs of Espresso and Astria. Ben is the CEO of Espresso. Espresso was working on actually a privacy L1 and ran into a bunch of issues around, I think, decentralizing sequencers. Also, I'm pretty sure privacy just maybe isn't as interesting to users as they originally thought it was going to be. And then Josh is building Astria, which is approaching the same problem, but attacking it from a slightly different angle. They're both working on decentralizing sequencers and attacking it from kind of different angles. So if you think about like what a blockchain does, you have like the data you have to make the data available. That's the DA layer. Then you have to like order everything. And then you have to execute the transactions. And what they're doing with the sequencers is like basically trying, if you have a centralized sequencer, that second step of like ordering everything. Again, this is my understanding after getting the breakdown from Josh and Ben, is like the group that orders those transactions right now oftentimes is just one party, and they're working to make that many different parties, which is decentralizing the sequencer. My take is that we're still really early, but I'm happy that someone is like focusing specifically on this issue because it seems like a huge issue. The why didn't fully make sense to me. So like the why I get the why for a user, right? There's a bunch of risks of having having one centralized sequencer. There's like censorship risks, there's reordering, there's the fact that it could go down, there's monopolistic behavior. Those are like the risks of a centralized sequencer. I didn't fully understand the like why an L2. So right now, like if you have a centralized sequencer, that's a honeypot for MEV basically, and you can make a bunch of money. Why would an L2 want to decentralize the sequencer? Like that answer, I think, wasn't as tight as it could have been. But overall, I thought it was a really good episode. What do you think?
Yeah, I agree with you. Everything you said is super important, and I agree with. I did ask him this question of like, what's the worst that can happen for a user at the moment if they're interacting with Optimism or Arbitrum? And Ben gave a more kind of nuanced answer, but it was not like super clear. I do think that I guess I also asked him, like, why do you think a team like Optimism and Arbitrum haven't done this already? Because of course some people raise this question of like, if something is centralized, then you can have some regulatory issues with that, right? If there's like one particular party that it is centralized, right, the sequencer, then that you'd want to decentralize that. And we've had the guys of Arbitrum on the pod talking about this, right? And fundamentally, I think that, you know, I guess I'll take a different take, which is users. The question is, will users really appreciate like the fact that it's centralized today? Because what are the incentives for Arbitrum to fork, or what are the incentives for Arbitrum to really be super extractive on MEV, right? The sequencer itself, right? Because it will degrade the user experience. Like the incentive is not really there for them to like do certain highly monopolistic stuff that degrades the user experience, because users can always go to alternative L2. The On the other end of the spectrum, if you decentralize the sequencer, but the tech is really not there, or it degrades performance, users will probably notice that and be perhaps more critical of that, and then go to maybe another L2. You see what I mean? Like if, for instance, one L2 decides to decentralize the sequencer and another one does not, and all of a sudden fees are much higher in that other system, or transactions are slower to process, I wonder what happens there from a user perspective, right? I think blockchain history tells us that they will really focus on its higher fees and slower transactions. I'm going to go to another environment, right? And that's just the state of like user experience and user behavior. And so, yeah, it'll be really interesting. It does feel early to me. At the end of that podcast, I asked them, hey, like, are we a year out, 2 years out? Like, when are we actually going to see these systems like the decentralized sequencer go live? And they both seemed to think that it was going to happen sooner rather than later, like within 6 months, they said. I believe like they referenced ECC, which is actually coming up this summer. And so, it'd be fairly interesting. It is no different. Like decentralizing a sequencer, and as they would say, is no different than like kind of bootstrapping your own L1, right? It also reminds me a lot of the history of Lido, like bootstrapping like a decentralized validator set, right? So it's more of an economic challenge, not a technical challenge, as they said. But it'll be interesting to see how both teams kind of develop and work their way towards actually getting this live.
What did you think about it in light of Tushar's comment from the Multicoin podcast about that? Once, I think he said that once L2 start to decentralize, you have to add consensus for agreement. And at that point, why not just use an L1?
Yeah, that's sort of like the biggest question in my mind, right? And I don't think I have it's one of those things you're really not going to know until they go live. I don't know really, because I mean you heard both of them say decentralizing a sequencer is no different than like bootstrapping your own L1, which kind of coincides with what Tushar is saying. The nuance, of course, is like on the performance side of things and the execution side of things, and that I'm not sure on, to be honest.
I think here's the counter argument to Tushar's take is that adding consensus in Tushar's definition of this, adding a consensus layer makes you an L1 basically. But in reality, adding a consensus doesn't turn you into an L1, right? An L1 consensus is responsible for ordering, censorship resistance, providing data availability, and validity guarantees to the light nodes. The L2 consensus does not do any of that. So I think consensus on L1 versus L2 like does different things. That's my middle of the bell curve take on that. Yeah.
There is still some consensus, but I guess what you're saying is the intensity or the of consensus is not the same for an L1 than an L2. Even in a state where you decentralize a sequencer, the level of effort and the consensus that is required is not the same as the consensus required for an L1. Therefore, the argument does not necessarily hold. Tushar's argument.
We are getting beyond my ability to argue with this stuff, but my understanding is that L1 consensus is responsible for ordering, for censorship resistance, and for providing data availability and validity guarantees to the light nodes. And an L2's consensus does not do any of that. So yeah. It would actually. I wish I had done my research on shared sequencers before recording the Multicoin episode, so that we could have had that kind of conversation with Tushar. Yeah. So I actually think it'd be really interesting there's like this panel that I want to put together, maybe at permissionless, which is Tushar, maybe like Steven from Arbitrum,
Mhm.
and then like Ben or Josh on
Ben or
shared
Josh. Yeah.
sequencers. I think that's a really interesting conversation.
Yep.
So
Yeah, I agree. That'd be nice.
yeah. All right. That episode comes out on Tuesday. Give it a listen, folks.
Yep.
Speaking of shared sequencers, Solana, MadLads, MadLads
Yeah.
minted. MadLads minted, and it was really interesting. So, I mean, big shout out to Tristan and who's the other guy? Armani. On MadLads, they minted at like 7 Solana, and the floor is now 83 Solana, I think it is. Like objectively, the most successful mint in the last year or two.
Mm-hmm.
So like just hats off there. I think there's a more interesting thing though, which is there's the Solana worked very, very well through this whole mint. I mean, the backpack app got DDoS attacked. So like
Mm-hmm.
it kind of broke on day 1 or day 2, but like Solana worked really, really well through all of this. Whereas ETH gets hammered every time on these big mints. And I think there's a conversation to be had around state compression and and just NFT compression. And I think if you actually look at Solana with compression, it's a couple of orders of magnitude cheaper than its closest peers. And like, let me, I think it was Chris Berniski did these numbers. It costs $200 to mint and deliver NFTs to 10 million users on Solana using state compression. If you think about like the evolution of NFTs in 2021 were these like expensive and exclusive things. And if you believe that in the coming years, they're going to become ubiquitous and driving experimentation at the bleeding edge of kind of like audience meets creation, that connection that happens there, and that NFTs will sit in the middle of that. I don't know. Solana performed pretty well here with MadLads. So
Yeah. Yeah, it'll be really interesting. Obviously, it also was most recently who called the death of NFTs,
some
which
Bored
I think
Ape
it was like
thread or
yeah, it was someone. It was more, and so generally speaking, I feel like it's very interesting to see a success of an NFT project in Solana. We'll see how the floor holds and the retention piece of it. Um, a lot of these NFT projects have a very short half life, right?
yeah.
It's getting all the hype, and look, there's renewed excitement, and the Solana community's gone through a lot, and I guess it's a breath of fresh air for a lot of folks, right? That it faded Solana and so yeah, it's great to see. I generally think that success of NFTs in any ecosystem is positive because I got to think that they onboard incremental like users into the space.
Yeah.
It's just a great funnel.
Did
So
you
yeah,
did you invest in either Magic Eden or Tensor?
no. Did you?
Well, no, I didn't. But the reason I bring it up is because for those who aren't in Solana NFT land, those are the two leading NFT marketplaces. Magic Eden, team of about 100 people. They've raised 9 figures in VC funding. Tensor is 2 devs, two devs in I think New York actually. One of them was at 2 Sigma, was on the research side at 2 Sigma.
Mm-hmm.
The other one, I don't know where they came from, but I think trading world, just 2 really, really smart developers. And so Tensor just flipped Magic Eden for like NFT volume on Solana, and love to see it. You got 2 developers beating out a team of 100 who've raised over 100 million in venture funding. So, and they haven't launched a token. So nicely done, Tensor folks.
There you go.
Yeah.
It's like a Blur OpenSea kind of thing. I mean, Blur now employs a bit more people, but for a while it was just a very lean, mean team.
Yeah. So shout out to Tensor. What would make you change your mind on Solana, Santi?
I don't understand why people think I'm like bearish on Solana, folks. I had exposure to Solana. First of all, I invested in very early on, both through being an LP in Multicoin, so I had exposure to that. Second, at ParaFi, right? We bought at as part of a consortium, like other funds invested as well. I've had close communications with Ben and Tully. I've been Breakpoint a number of times. Like I'm not bearish on Solana. I'm critical of like any system. No, I gotta say, like, even I got it wrong too. I mean, I got like a lot of the Solana community saying like, "Hey, there's no reorg here. Like, you should really understand how it works." And like, I was wrong, right? And so I would agree that I'm not as close to the Solana ecosystem as I am to the Ethereum by virtue of my portfolio companies. A lot of them are in Ethereum, but I made a number of investments. Probably between 15 to 20% of my portfolio has exposure or is working deploying in Solana. So yeah, like it matters, but I'm not like as close to it. That's just the reality of things. And I've said it time and time again. I was not in this podcast. I was being interviewed in another podcast, and I said we were talking about like what defines communities, which I've always found to be a very fluffy construct and term, which people throw around lightly. But I do think that Solana has always struck me as, if I were to define like a number of ecosystems, I think Solana is far more different than perhaps other EVM L1s, not only from an architecture perspective, but also from a just the DNA of Solana. If I were to summarize it, is like very resilient. We've had Anatoly here talk about like how they've gotten a lot of shit from the Ethereum community and others in crypto, and they've actually used that to re-architect and change some dynamics, including, for instance, how they determine fees, which is not just one flat fee. It's just based on they've like re-architected the fee model in Solana, which I think is fascinating, and I think is one of the more important things that Solana has. It's like, in reality, it's like Uber, right? You have surge pricing in a particular geography. If you have surge pricing in New York, that doesn't affect surge pricing in Bangalore, folks.
Yeah.
Shouldn't. And so like those kind of, their willingness to be very malleable and actually adapt is very interesting. I think they're going through a pretty important moment, like Ethereum did after the DAO hack, that will really define their community and really harden them, and they'll survive. Like in private conversations, I just had a price in mind, and after it hit, like it was a goodbye in my mind, in my book, like sub 10. But more importantly, I think the other piece that I want to talk about is the Solana phone, which a lot of people are now getting. And that type of thinking and out of the box thinking is what you see in companies like Apple that just created like a new category, like an iPad. Like, of course, they're not creating necessarily like it's an Android phone, but when you think about the friction points in crypto of onboarding, like having a phone like that is the type of thinking that can get very, like, the upside of that experiment is very high. And I think that is perhaps one of the more interesting things and a highlight of the team behind Solana and their willingness to like experiment with these kind of things. So yeah, long answer. Like, I'm not an expert in Solana. No, by any stretch of them. I'm like acutely aware of that, but I pay attention to that. And it's the second ecosystem that I'm most excited in terms of where I put my dollars to work. Does that make sense?
Did I strike a nerve there?
No, I mean, I want to just clarify it because sometimes just people think that I am, of course, biased. It would be dumb for me to like, I just do like where I put my money to work is where I'm most invested. So obviously Solana is not like, it's like the Multicoin guys, right? The Multicoin guys like look at the world and lens through Solana architecture, and they think that's the greatest and greatest. I just sort of like, I've never been a maximalist. Like, I'm aware that I think we're perhaps more early than not, and any sort of rigidity in your thinking is gonna be like, is really gonna cost you. And more so how things get implemented now, where ideas spread much faster, and these projects and experiments get a lot of traction and die much faster. And so the half-life of that, so you can't really just, is there a version here in probability that Ethereum is not the dominant L1? Absolutely. It's greater than 5%, I think. Like, the race is not won yet, primarily because we have like a few million users in crypto active, much less than that. So like, can't really say, right? So the barriers to entry in open source systems are lower, and so people can just switch very quickly, as a lot of projects left Solana during this crisis to go elsewhere, and now are wondering, was that a good choice? Now they can always come back, right?
So you You bought Sol in Q1.
Yeah. I had a number in mind when it dipped below 10. Didn't
Below
it?
10.
Like
Yeah.
it hit 830 something, or I was like,
Yeah.
okay.
That was the
Privately,
Solana's over day. Yeah.
yeah. So it's always like when the pendulum. The traditional investor that I follow the most, and he has a great memo now about like bank runs and all this stuff, is Howard Marks, and he is also always one of the things that I've read. He has also a great book, like the most important thing. I think it's a great book, but his memos are free and you can like access them on his Oaktree website. And the thing that has always stuck on me is like price is the most important thing. Now, how you determine fair value of an asset's another, but prices you can buy a great asset at a terrible price, and it makes for a terrible investment. You can buy a terrible asset at a fantastic price. First Republic, for instance. Maybe you think it's a terrible asset, maybe it's a shitty asset, not as pristine, but if you buy that for a dollar, it's great. Like UBS, for instance, like their acquisition of Credit Suisse, they'll print because they just got it basically for free. So, anyways, I think that's what yeah, tangent, but I love Howard Marks, and I think price is difficult to ascertain in crypto, but I guess you just sort of like when you see something really get pounded on and the sentiment, gauging by the sentiment on Twitter or just crypto generally, that just sort of tends to be a good indicator of when to enter or exit a market.
Agreed. Glad we got you on Solana.
You got me, folks. Like, okay, can we talk about something? I'm actually really interested to hear your take. Now
I can tell these Twitter comments we're getting to you about like.
Dude, stop asking me questions. Okay, now it's your turn. Stop asking me questions. I'm going to ask you a question. Question is, so we had the genius of Chamath say that crypto's dead. I think the media, like the headline was, he said that crypto's dead, but I think he meant to say like crypto's dead in the US, but not to infer that the crypto as a whole was dead and there's no promise there. I'm curious what you think of that.
If you don't spend time in crypto every day, I completely understand how you think that crypto is dead. But to me, that is just a telltale sign that someone doesn't actually spend any time in the industry. Because let's look at what we have going on today. You have all this stuff happening with Solana that we're talking about. You have these amazing conversations happening around MEV. Like this whole episode of Bell Curve or season of Bell Curve with MEV, super interesting. Some of the smartest people I know right now working on what should happen with MEV. You have L2s like Optimism and Base and Arbitrum and like all this great stuff happening on L2s. You have like these brilliant minds who have like quit Google to go work on figuring out shared sequencers. You have like NFTs making a comeback right now, like with the hottest NFT drop in like the last probably 2 years with MadLads. You have different you have like this whole Cosmos ecosystem, like kind of trying to figure it out, but like doing some really interesting stuff. I just think that just tells me like they don't spend any time, and it's not but like I don't fault them. I don't know. Like Chamath is investing in nuclear and like fusion and like carbon credits. I heard is his new thing. Like I don't know. That doesn't shock me that he thinks that crypto is dead. But if you spend any time in crypto right now, you would obviously know that you have like the 4626 ERC 4626, the token vault standard going to come out soon that everyone's going to be talking about. You have like ZK EVMs. You have the Saga phone launch. You have like liquid staking derivatives like LSDFi is going to be a thing in like Q3, Q4. You have like roll up sequencer decentralization, payment for order flow, and like the MEV latency wars. There's just so much happening right now in crypto. So that just tells me that he's not spending any time in crypto. That's fine. He'll come back.
Yeah. He was early in Bitcoin, and then he like sold a bunch because he bought a house in Tahoe with Bitcoin, and that cost him dearly. I think you could have probably bought a whole lot of Tahoe with that Bitcoin that he transacted with for that parcel of land. Talking about like exciting developments, I think a couple of things that I think we mentioned here that are gathering our attention. I'd say there's been a lot of surge in base. Like this is Coinbase L2. There's been a lot of there's still in testnet, of course, but like a lot of deployed contracts in testnet. I heard obviously Aave, Sushi, a number of other projects really kind of like lining up. There's still a lot of questions of how that's going to operate, right? Is it going to have a decentralized sequencer? What's going to be the validator set? You're going to have KYC, or you're not? Yeah, I don't know if there's anything you'd add to that, but anyways, this is probably the thing that I'm following the most in terms of like developments. Obviously, the decentralized sequencer is farther out, but like in real time, this might be the most important thing because I really want to track, you know, the onboarding from like Coinbase exchange users in the millions into, this
Yeah.
L2. I think that alone is could potentially be the biggest catalyst that we're going to see this cycle.
Yeah. I mean, so if you're so Blockworks Research put together a chart on the daily contract deployments for Base versus Ethereum, and if you look at Base, it's like, I don't know, somewhere like around 10K contracts deployed every single day, and if you look at Base, it's what is it right now, 60K, but earlier this month it was like over 100K a day on Base. So that, I mean, that's pretty impressive. I think there's actually a third bucket, by the way, in terms of decentralizing the sequencer. So if you look at Coinbase, they have a fully centralized sequencer network. And if you talk to like Astria or Espresso, and if you listen to this podcast that goes live on Tuesday, that's like a fully decentralized sequencer network. I bet Coinbase will do a third option, which is like one by one adding what, like very, very methodically decentralizing the sequencer. So I bet they will pick another big company in crypto, for example, that is very comfortable running nodes or something like that to be the second to like decentralize the sequencer by one. So then there's two, and then they'll pick another one, and then there's three. I think that's how Coinbase will probably decentralize their sequencer.
Yeah. So. Speaking of really exciting developments in L2s, I mean, I'm really curious to get your take. Franklin Templeton announced, this was yesterday. Franklin Templeton is one of the largest kind of mutual funds in the world, I'd say. But they announced that the Franklin on-chain U.S. government money fund is going to be the first registered the first U.S. registered mutual fund to use a public blockchain, in this case Polygon, to process transaction and record ownership. So basically, if you have like one share of this mutual money money fund FOBXX is represented by one Benji token, and this sits and lives in Polygon. And so if you're a token holder, you get exposure to the fund, which invests mostly in, I believe, like treasuries or whatnot. And you have like their own app, and in the app you can see kind of this token, which is like basically maps 1-to-1. It's interesting. I'm curious to get your take because like you saw like Maker basically kind of go their own route and have to set up as a DAO, like touch, the real world and, to get to buy treasuries. Like, does this mean that, basically you can buy Benji tokens and get exposure to, like, can you do the reverse, right? If you don't have like a broker, if you don't have like an account with Franklin Templeton or whatever, or like some other, Schwab or Fidelity, can you just buy the Benji token and that gives you access to the money fund? And if you do that, do you have to like KYC? Do you have to do some like basically other process to like get onboarded? Does this only mean that like you can only, is it just one way where this token's kind of like restricted only to people that have access to? Anyways, a whole host of questions, but what's really exciting is to see someone like that, come in and one, make the choice of Polygon, and two, I think this is the first of potentially many of their products that they decide to register ownership and kind of transactions on chain, which is very exciting, I'd say.
Yeah, I mean, Franklin Templeton, it's cool to see making a big push into crypto. Their CEO spoke at Consensus yesterday, I think it was. Like they've got a whole Franklin Templeton digital assets like division now. I think it's kind of cool. I think it's cool that they're
You know
doing
how
this in
big
the
that
bear
is?
market. What?
Are these like 5 people or like 20, 30, 40, 100 people?
I don't know. I'm not sure.
Nice.
But I know they have 1.5 or 1.6 or 7 trillion AUM.
Trillion.
I mean, they're colossal. They're like a
Wow.
third of the size of Fidelity. It's a huge group. So
Yeah, no, it is.
I have something that I don't think anyone has reported on. I don't think we've written about this. I don't think any other media companies covered this, which is I was looking at the fund structure, and the expense ratio is 8.76.
Percent?
Percent.
Holy
That
smokes.
when this goes live at the end of July, that will make this the world's most expensive money market fund. I don't know if that's a typo. I don't know if that's I mean, they're off by an order of magnitude here.
Can you send me a link? Like,
Yeah.
where we usually communicate. That's, I mean, if that's true, holy smokes.
Here. Send this to you on you make it
for context, the expense
usually
ratio of most funds is like 0.04%. Like 0.1% would make it an expensive.
Here, look at that message I just sent you.
No, okay, hold on.
Now they're waiving. No, there's a fee waiver and expense reimbursement
Oh,
of
I
8.56.
see.
But why would that?
Yeah.
Why would the total annual fund operating expenses be 8.76%? That is the world's most expensive money market fund. Explain that to me.
Is that like a buffer? It's saying the investment manager has contractually agreed to waive or assume certain fees and expenses, in this case, the 8.6%, so that total annual fund operating expenses, excluding acquired fund fees and expenses and certain non-routine expenses, yada, 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 related to litigation, indemnification, reorganization, liquidation, for the fund do not exceed 0.2%, which is more standard for most of these type of products, until July 31st, 2023. So they were only waiving it for this period. During this term,
look at the thing I just sent you. So this is their actual website. So then if you actually click the little thing above the expense ratio, it says expense ratio 8.76%. And then if you look at the gross expense ratio, this is in like size 2 font here. It says reflects the total annual operating expenses for the share class shown. I mean, then this reimbursement goes away over time.
Well, basically, and it's only for like 2 months.
Yeah. So at the end of the summer, this is going to be the
Who's
most
going to buy this thing in the
money
right
market
mind?
fund in the world.
This makes no sense. Like, I'm sorry, but that's like, who in their right mind is going to do this? That was like my initial question, right? Maybe they're assuming and banking on this like somewhat predatory behavior, which is the people that are going to buy this product have basically no access to this fund structure in a normal situation. So they're going to buy this token and, get exposure to this fund.
Yeah.
But it's quite strange, actually.
Yeah. All right. I have one more thing, and then I got to wrap because I have
I was just saying, this is just a reminder, folks. But great catch, by the way, because the headline is very bullish. I'm curious who buys this stuff. Like, they're going to get like, it's like the Coinbase NFT launch. You're going to have like $2 people invested in this thing and then realize.
Yeah, I don't get it. But I do want to highlight.
If someone from Franklin Templeton or Polygon, wants to come on and explain this, please do.
Circle CCTP finally actually soft launched, and I just want to give a quick overview. I talked about this a couple months ago when they announced it, but I think it's a pretty big deal that feels technical, and so it's kind of been swept under the rug. But I think this, in case you guys missed it, CCTP allows USDC to be transferred seamlessly between chains, and is just going to enable this like better cross-chain UX. So it's soft launched on ETH and Avalanche yesterday. CCTP stands for Cross-Chain Transfer Protocol. It's basically a permissionless on-chain tool from Circle that facilitates USDC transfers between blockchains rather than needing liquidity on the destination chain. Circle basically just mints native USDC after burning USDC on the source chain. So if you like to get
basically
into detail,
like most bridges use this lock and mint, right? You lock an asset in one chain and then it mints another, but there's this period where you have to have liquidity in one, and then there's all kinds of funky stuff that can happen. There's been hacks because of this, like Oracle issues or whatnot. What is so interesting here is that Circle, it's way more capital efficient. You're natively like they can basically burn USDC on Ethereum, mint natively in Solana, or pick your L1 of choice. And so when you think about most of the bridging is stablecoins. I mean, stablecoins are just massive in terms of like transaction volume, and asset transfers in crypto. So this is huge.
Yeah.
Where do you think other bridges? Does this mean like? I mean, of course, the question for this cross-chain transfer protocol, my understanding is it strictly for USDC, but like, what does that mean for other assets, and what does that mean for other kind of bridges out there? Do you it's unclear, maybe you know this, if at some point it's possible to like extend this functionality to a token other than USDC.
What I don't, yeah, I don't fully know what happens with other bridges, because as of today, MetaMask and 10 different partner SDKs such as Layer 0 and Wormhole have integrated with CCTP, and actually 5 bridges have integrated with CCTP. So I need to look into, like, is this a competitor to bridges? Do the bridges integrate with them? I don't fully get it, but
So I'm reading here like cross-chain swaps, like they're saying you can like swap ETH on Ethereum for AVAX on Avalanche, and like basically they're using USDC as that connective tissue, right? But
if
that
you
has a
have
whole host
USDC on Avalanche, but let's say you have USDC on Avalanche, but you want to buy an NFT on Ethereum, you can now seamlessly through a DApp that uses CCTP, it'll route your USDC from Avalanche to ETH, then swap it to ETH to purchase the NFT. So I mean, it creates a better user experience. So
yeah, for a vast number of use cases, right? Yeah.
Yeah.
But anyways, I think this covered a lot of it. Light week, but interesting developments. So yeah, hope everyone has a great week. Thanks for tuning in. And yeah, keep your eye out for next week, this sequencer decentralization pod that's going to launch, and that's going to be a good one.
Indeed. Be well, sir. Keep that
Right,
sweater
sir. I'll try for sure. All right, guys, have a great weekend. Take care.